Welcome back. You're watching Markets at Noon with me, Nayantara Rai in New Delhi, and Pankaj Poddar joining in Mumbai. At the start of the show, we saw markets come under pressure. We saw that with the Nifty, with the Sensex. That seems to be the growing trend at the moment. But we also are now being joined by the management of HDFC Securities. We're getting them to chat about IT stocks. HDFC Securities is convinced that the stocks will be resilient and will withstand business shocks. So here's Apurva Prasad, the research analyst for IT at HDFC Securities. Hi Apurva, always a pleasure chatting with you. You see Indian IT, and I'm quoting you here, as anti-fragile. What is anti-fragile? How have you arrived at this conclusion?
Yes, precisely. So what we're really trying to say is that, it's not just resistance to this large change. It's actually thriving within that, and growing stronger. And that's exactly what has happened, within the Indian IT companies. So when a lot of these digital disruptions came, it looked more like a challenge for Indian IT because it came at the cost of cannibalizing your own revenue streams. Despite the fact, as I mentioned earlier, being able to scale digital business to an extent that, you can actually get offshore leverage out of digital, that I think is pretty significant. And the fact that you can actually have better margins in digital eventually, I think that's again, which is pretty significant, which is completely on-site driven fixed price, metrics. So the fact that you're able to counter this big change of technology, which is essentially cannibalizing your own revenue stream and, driving strength out of that, and in fact having growth leadership. So if you, for example, if you look at TCS's case, their digital will probably be growing faster than most peers, so Accenture included, in fact including their inorganic too. At the same time, the shrinkage in the legacy is also least compared to peers.
How would you be reading into the new H1B visa rules? How adversely can it impact cost and margins of large IT companies?
No, so I think Indian IT is far more resilient now to any adverse developments on H1B than probably what would have happened about 3 to 4 years or 5 years back. Primarily because the entire headcount mix has changed. The number of H1B applications have gone down significantly. There is a very clear effort in terms of building an on-site pyramid now, which is very cost competitive. What it does is, obviously, there is a higher subcontracting cost that you're looking at. So these are some of the risks that come out of that. But largely, I think the risk that H1B legislations had, which by the way never took off. So you never had any movements in the legislation side. It's only on the executive side that restrictions came about on the H1B. So I think the risks around H1B are far lower than probably what it was earlier. And I think Indian IT is probably much better equipped today with.
And the new H1B visa rules, how adverse is that going to be on cost and margins? Can it impact growth? You have said that these stocks are anti-fragile, so you're saying that can be withstood. What about third quarter earnings? What did you make of second quarter? The rupee has appreciated since then. Won't that come into effect in the third quarter, and therefore won't that counter your anti-fragile theory?
Sure. So our estimates are pegged at about 72, which is close to where this quarter will end average, assuming rates stay at current levels, so about 71.5 to 72. That's where it should. Yes, I mean, those tend to typically swing earnings, and it's been very volatile, whether on its way up or down. Both ways we've seen that. So typically about 1 percentage point has got 30-35 basis points impact on the margins, and roughly about 1.5 to 2% impact on the EPS. So that's the kind of sensitivity that that the currency has. So yes, I mean, these swings have been a lot more volatile than in the earlier case, and I think our estimates, based on our estimates, I think we see a very, very good upside.
What are the top large cap, mid cap picks and expected returns?
Sure. So I mean, if I have to call out two from large cap, it will be TCS Infosys. With about 20% plus upside from the current levels. In two within the mid-cap IT space, I'll call out an L&T Infotech, L&T Tech, if I can add maybe a Zensar to that list also.
Thanks so much, Apurva, for taking out time for us. Always good. to their perspective. Taking a break, that's it as far as the team of Markets at Noon is concerned. Stay tuned, Markets at Lunch on the other side.
Maximize